morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 1st of August. Soft US GDP reduces bets of a near-term Fed hike. The US economy grew by much less than anticipated in the second quarter, official data showed on Friday. The first estimate of GDP indicated that the economy grew by 1.2% quarter-over-quarter, missing expectations of a 2.6% increase. Growth in the first quarter was also revised down to 0.8% from 1.1% previously. The dollar weakened against its major counterparts on the news, as the soft report cast doubts on whether the FOMC will opt to raise the Fed funds rate in the near term. However, Fed officials Kaplan and Williams both downplayed the importance of a single data point, suggesting that a soft GDP print does not rule out a rate move this year. In a speech during the Asian Day Monday, New York Fed President Dudley added that while GDP growth was sluggish at 1.2%, he would not dismiss the possibility of further tightening this year, as any move would depend on upcoming data. We therefore expect market attention to remain on incoming economic indicators, with the US employment report on the 5th of August likely being the next major data point that influences hike expectations. The results of the EU banking stress tests were released on Friday and were better than expected, alleviating some worries over the health of the European banking sector. We believe that the positive outcome is likely to reduce pessimism regarding potential instability in European banks and may therefore provide support to risk sentiment over the next days. Today is a PMI day. During the European day, we get the final manufacturing PMIs for July from France, Germany, and the Eurozone as a whole. All the indices are expected to confirm their preliminary estimates, something that could keep the reaction in the euro limited, unless we have significant revisions. In the UK, the final manufacturing PMI for July is expected to confirm its preliminary estimate as well. From the US, we get the ISM manufacturing PMI for July. The forecast is for the index to have declined, but only marginally. A below estimates print could bring the dollar under renewed selling pressure. The final market manufacturing PMI for July is also due out, but the market usually pays more attention to the ISM figure. Markets will remain closed in Canada and Switzerland. On Tuesday, during the Asian morning, the RBA will hold its policy meeting, and the forecast is for the bank to reduce its policy rate. Market pricing leans towards a rate cut as well, with a 64% implied probability. We view it as a close call, but we believe that the lackluster CPI for the second quarter data provide the RBA with all the incentive it needs to ease at this meeting. In New Zealand, the Reserve Bank will release its updated two-year inflation expectations. Even though no forecast is currently available, we believe that this may be one of the deciding factors of whether the RBNZ will opt to cut rates at the August meeting. In Japan, the government will officially announce the details of its highly anticipated fiscal stimulus package. From the UK, we get the construction PMI for July, and from the US, we get personal income and spending data for June. On Wednesday, the US GDP employment report for July is coming out 2 days ahead of non-farm payrolls. The forecast is for the print to have ticked down. From New Zealand, we get the employment data for the second quarter. On Thursday, the Bank of England's first Super Thursday policy meeting following the referendum will captivate market attention. At this gathering, besides the rate decision and the meeting minutes, we also get updated economic forecasts and a press conference by Governor Carney. Expectations for easing are very high going into this meeting, with more than 19% probability for a 25 basis points rate cut at the moment. Finally, on Friday, the US employment report for July will take center stage. The forecast is for non-farm payrolls to have risen by 180K, considerably lower than June's astonishing 287K, but still a solid reading that would point to further tightening of the labor market. The unemployment rate is expected to have remained unchanged, while average hourly earnings are forecast to have accelerated on a monthly basis. We also get Canada's employment data for July. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.